We are on. All right. Well, hello everyone, and welcome to my channel. I am Natasha Tomlinson, a realtor here in Arizona. Today, I'm joined with Clarence Ferguson with Green Home Loans, and we are excited to dive into the world of FHA loans and down payment assistance programs, and really how those programs can help make your dreams of home ownership, your dreams of real estate a reality. Whether you're a first-time home buyer or you're looking for ways to ease the financial burden of buying real estate, this video is for you. So, Clarence, thank you again for joining us today.
Thank you for having me. How you doing?
I'm doing pretty good. I'm ready to dive in.
You look all cozy in that set of yours.
Well, that's it. It's supposed to be homey, right? It's supposed to be homey and inviting.
Yeah, I'm glad to be here. Let's get it. Let's talk about FHA. Let's talk about down payment. Let's talk about all of it. All the many ways you can get into a home. It is fun to talk about because there's so many different ways,
Definitely. Well, tell me a little bit about the main benefits of the FHA home loan, particularly for first-time home buyers.
Well, FHA is a government-backed loan, which means as an investor, if you invest in mortgage bonds, you're secure when you invest in a FHA loan because basically the government backs it. So they have less stringent credit requirements to get in. We can go down to a 500 FICO. Although I will point out, if you have a 500 FICO, you will need to put a minimum of 10% down, just so you know. Traditionally, FHA is 3.5%. But when you have a 500 FICO, then you're going to have to put 10% down. To get to the 3.5%, you need to be around a 580 credit score. FHA is a lot less stringent on credit requirements. That's why it's a good deal. And again, it's a lot easier to get into because the government basically is securing the loan, and it's secured by what they call mortgage insurance premium. So when you have a FHA loan, you do have mortgage insurance. It doesn't help you. It's not mortgage insurance where you pass away or you're not working, your debt is paid by somebody else. That is just part of the government's loan. And the only way to get out of that mortgage insurance is you got to keep the loan for 11 years or you refinance into a traditional mortgage type, like a conventional loan or something else.
Okay. So, many first-time home buyers, talking to them, they're concerned about their current debts, credit card debt, student loan debt. So FHA would be an avenue for them, could be a good fit.
That's correct. There is a percentage of your student loans, if there's deferred, that we count against your debt. But all this stuff, as we talk about it before you get qualified, we go into it, we figure out where you are, where you need to be. Again, FHA is going to be an easier way to get financing versus conventional.
Yeah. Got it. So, some of these homes on the market, they need a little TLC. They need a little work, right? They need a little vision. And that's where some cash investors come into play. But maybe someone who's qualified with FHA, they want to take advantage of those types of properties too. So I know there is this FHA 203K loan. Can you talk a little bit explain that loan and how it's different than the standard FHA loan?
Sure. So allow me to, I've got some notes up because I want to make sure I don't miss anything. What you're talking about is the FHA 203K loan. Okay. This loan allows you to buy and finance the needed repairs for this type of home. So let's say you go out, you're with your real estate agent, you've got pre-approved first. Please get it pre-approved. Do not waste Natasha's time. Make sure you have an approval before you go out there.
Yes.
But let's say you find a home. Let's say you're like, wow, I really like this one. And then we do a inspection, which is required. And let's say the house needs, as Natasha said, a little TLC. Here are some things you can do with a 203K. There's two types of 203Ks. The first one is for major renovations like structural repairs or anything that requires more than $35,000 in repairs. So really big things, maybe a roof, maybe the floor. Just giving you examples. The second one is a limited 203K for smaller non-structural repairs and improvements that are capped at $35,000. Both of those loans can be wrapped into the cost of your home, but you still qualify for the amount of the purchase. So let's say you have a floor that needs to be redone to meet FHA standards, that you can finance that entire amount, and that will be on top of the loan to value. So traditionally, when you get a loan, you get financed to the amount of that loan. With the 203K, you get financed. So let's say you buy $100,000 house for simple math, but it needs about $20,000 in repairs.
I don't know where that house is, but okay.
Right. Right. Well, it's down by the lake.
Yeah, in the swamp, in the middle of the swamp.
Exactly, in the middle of the swamp, and you got an alligator as a neighbor. So basically, that loan would be $120,000. It would be financed for you to do the repairs. You have to submit a work request. All the repairs have to be invoiced, and then the loan gets closed. Here are some eligible repairs, just so people know.
Okay.
Structural changes such as plumbing, roofing, flooring, windows, kitchen and bath upgrades. Certain luxury upgrades might not be available. Like you can't say, I want my upgrade to be a hot tub or a pool. That's not considered necessary for living.
I have to soak these bones. Okay.
No. So just FYI, so you know what that means.
Okay.
Typically, this is all combined. It's usually structural, needs a roof, needs this. It gets financed in. There's the $35,000 minimum, and then above that, but it is financed into the loan above and beyond what you qualify for. So it works good.
Okay. So can you walk us through what the application process is for an FHA loan?
It's the same as a regular loan. You fill out an application, you put all your information. We're looking for 2 years of work history, 2 years of residential history. If you're a first-time home buyer, there's certain loans that are going to be income restricted in case you're using down payment. And I know we're going to get into that in a little bit, but FHA, there's a loan limit. You can't go over the county's loan limits. Matter of fact, while we're talking, let me pull up the county loan limits because I know it just changed.
I was going to say, there have been some changes. They increased it recently, didn't they?
Right, they did increase it. So let's see here really quick. Okay, so FHA loan limit is $530,150. You cannot, go over that, and if you do, you have to make the difference up. So keep that in mind. So that's where we start. We do a typical loan application. We're looking for income. We're looking for assets. We're looking for everything. I always tell people I'm like an attorney for you. I am basically, my job is to make sure you look good. Tell me the story. I paint the picture to the jury. FHA, again, is generally more credit friendly. So if you have some dings on your credit, maybe your debt's high, it does allow you to go to a higher debt to income ratio. I've seen FHA loans get approved at almost 60% DTI. You have to have compensating factors. Maybe you've got $1 million in the bank, or something that offsets. Don't worry about this DTI because we're good. And again, with the FHA loan, we can go down to a 500 FICO, but with a 500 FICO requires you to bring to the table 10%.
Got it. So interest rates, I know they're all over the place, and there's a lot of factors that contribute to interest rates, but how do the rates for FHA loans compare to like conventional loan programs?
FHA rates are going to be cheaper. Same thing with VA. Anything that's backed by the government, USDA. While we're talking, I'm pulling up FHA rates right now.
All right. And again, right, they change all the time. So it's a quota rate for today doesn't mean that that's going to be the rate tomorrow. So,
right. Rates change 2 or 3 times a day, just to be honest with you. They're showing rates in terms of right now. Let's see. Let's pull this up. They're going to be cheaper. They're going to be more efficient because the government backs it. So the government essentially is telling the investors, hey, if this loan defaults, we got it. And you pay for that in the terms of mortgage insurance, or you might see it as MIP. And for your viewers, mortgage insurance on a FHA loan, there's a lump sum paid up front.
All right.
It's the fee. And then it's also a monthly fee, which increases your monthly debt based around that amount. Right now it's 6.4, which is about maybe a half lower than what conventional rates are.
A little bit lower. It's better than we've seen, in recent months. Not for sure. It's trending down.
Your FHA government-backed rates are always going to be cheaper than conventional rates because, again, like I said, the government is backing that loan. That means if their client defaults, they will cover it. So the investor is pretty safe.
Got it. So let's switch a little bit. People want to look at these loan programs, but then they think about the down payment. 3.5% on a $500,000 house. That's a good chunk of change, right?
Yeah.
So people are like, well, who's paying that? Where does that money come from? I've got these responsibilities over here. I don't feel comfortable coming up with that down payment. I see the beauty of owning real estate. I see the benefits, but I'm not sure I can jump into that. So we have these down payment assistance programs. How does one qualify for a down payment assistance program? Are they just for first-time home buyers?
No, they're not. And generally, just for people's knowledge, a first-time home buyer is a person who hasn't bought a house in the last 3 years. Right. So we have people who have bought previously but haven't bought in 3 years. They would be considered again as a first-time home buyer. Mm-hmm. To qualify for a down payment assistance, there are some programs that are income limited, where you can't make more than the area median income. Number two, we do have lenders who don't have income restriction. Now, with any type of loan product, anytime they say something like, we don't have an income restriction, you're probably going to pay a little bit more on the interest rate. I would tell people, average, you're going to be around 8.25%. Now, if you remember, we mentioned earlier, the average FHA rate across the country was 6.4. So now you're adding 2 points to that. Why? Because they're giving you free money. We have programs that start at 3.5% and go all the way up to 5%, depending on your credit score, different things. So they can give you part of your down payment and closing costs at the 5% mark. And depending on the scenario, maybe it's better if you only get the down payment you need to qualify for FHA. Here's some of the myths people think about. They think if I get down payment assistance, I don't have any costs. That's not true. You're still responsible for your closing costs. You're still responsible for your earnest deposit. Now, with a great realtor like Natasha, she can negotiate. Maybe the seller offers you some concession.
Right. We'll definitely talk about that during our buyer consultation. Definitely.
Exactly. So down payment assistance, there's all types of programs. There's like 60, 70 of them. And really, once we take an application, we figure out where that buyer falls in that matrix. Then we're able to advise them on what's the best down payment assistance for them. There's a little bit more paperwork. There's obviously, if you're using this for a 203K, you got to have invoices of what the repairs are going to be. Also, with down payment assistance, we are seeing that a lot of lenders are not requiring reserves. And what are reserves? Okay. So let's say your monthly payment is $2,000. They may want 1 month reserve in the bank. So you have to have a minimum of $2,000 in the bank. Let's say they say we want 6 months in the bank. You might have to have 12 grand in the bank. Now that's odd and very rare, but sometimes that comes up. If you have a smoking deal on your interest rate, it might be because you have a bunch of reserves.
Okay.
So all these things are figured out in advance. So you're not
Right.
walking into this unknown. Again, you have some lenders that have income restrictions, meaning you can't make too much money. And then we have some that don't. And we get the whole gamut. I have a software that once I put the person's information in, all the lenders who will do their loan pop up and what they will do, what they won't do. And when I do the pre-qualification consult, I go over this with the borrowers and I say, here's the benefits of a DPA that's forgivable. So what is a forgivable DPA? This means that we give you the money and we don't want it back. Here are the rules. You might have to stay in that loan for 3 to 5 years. Then after that, it's forgiven. So it's like free money. But let's say you get an 8% rate and all of a sudden the world's going great and we offer 5% loans. You say, hey, I want to refinance. Well, guess what? You got to pay that second mortgage off, which is the DPA, which is fine. If you have the equity and it makes sense, who cares? You're just paying off what they gave you. If you're in a forgivable one and you went past the time limit, they just go here. You can pay it off when there's no penalty, meaning you don't have to pay it back. Forgivable versus non-forgivable means you have to pay it off versus you don't pay it back. That's really how that works.
Okay. So let's circle back. You said something with the FHA 203K loans and that you have to have inspections and you have to have qualified vendors, contractors. So you mean I can't have my uncle Tito come out and do the work, or I can't do the work myself? Do I have to have who can do the work? Okay.
Now, you already know this is a government loan, so the government ain't gonna take Frank down the road. They have to be licensed contractors. It has to be everything. I tell people when you're dealing with government loans, it has to be justified. And a big thing that comes up on FHA loans is appraisals. On a conventional appraisal, if you buy a house, let's say, Natasha, you sell me your house and you say, Clarence, this house is great, but I'm gonna tell you right now, the plumbing is janky. And maybe I have a friend who does plumbing. And I go, that's fine. Give me a discount. I'll buy this house because I'm going to have my friend fix the plumbing. Well, government is different. Government goes, we can't guarantee that loan walking into a train wreck, meaning we knew the plumbing is bad. If the government's insured it, the government's also liable. So the government wants, you have to have that appraisal. So let's say I still do the deal with you and you already told me that the plumbing was janky. Well, we do the appraisal and the appraiser goes, man, this house is worth 120. But if they fix that plumbing, it'd be better. Well, the government's going to not approve that loan until the plumbing gets fixed first.
Got it.
So that's how that works. So it has to make sense. It has to be livable. I tell people it has to be livable. You have to have running water. You have to have light. It has to be safe. The porch you can't fall through the porch and get approved for that loan.
And those houses are out there. Believe me.
Yes, they are.
Okay. So how can someone find out about which down payment assistance programs they qualify for?
Like everybody, they need to do a pre-purchase consultation, which is really an application, a goal setting. We figure out where they want to be financially, what they're trying to do. And then based on that information, we're going to show them a couple offers. Here's how we get to that goal. Do this, we get there. That's how that works.
Okay, great. Well, that's quite a bit of information that you provided for us today. And I wanted to thank everyone so much for joining us. And again, a big thank you to Clarence with Green Home Loans for sharing your expertise on FHA and down payment assistance. We certainly hope that you found this information helpful and feel more informed about the options that are available to you. So if you enjoyed this video, please give it a thumbs up and subscribe to this channel for more real estate tips and insights. If you have any questions or need further assistance, feel free to comment below or reach out to us directly. Remember, we're here to help you every step of the way on your home buying journey. Thank you for watching, and we'll see you next time. All right. That's what I got, Clarence.
All right, you edit your own videos. You're gonna